Meaning of the audit. Audit means independent examination of financial information of an entity. And is nothing but the audit procedures that we perform. Financial information is the financial statements that includes balance sheet, profit and loss account, the statement of cash flow, and entity means entity can be in any form, that is company, trust, whether it is a profit-making organization or a non-profit making organization. Let's move to the next concept, that is objective of the audit or auditor. Here the objective of the auditor by performing the independent examination is to express the opinion. The keyword here is opinion. What is the opinion relates to whether the financial information that we audit is free from material misstatements and whether the financial statements are prepared in accordance with the applicable financial reporting framework. So what is material misstatement? What is applicable financial reporting framework? That we'll be learning in the next part. Now we'll identify who is an auditor. A person who conducts the audit. It's very simple. Includes the engagement partner, the audit manager, the paid assistant, the senior article assistant, junior article assistant, and if any other person who has been designated in such way that he belongs to he becomes part of an engagement team, then he is also called as an auditor. So now coming to what is books of accounts. This is as per section 2 subsection 13 of the Companies Act 2013. The books of account includes all that keeps a record of money received, money expended, sales and purchases of goods or services, assets and liabilities, prescribed cost items, that is your cost related information, if any, prepared in accordance with the Companies Act, if it is required to be prepared. If you have prepared, even that is part of your books of accounts. Moving to the next concept, what is financial statement? See, now we have said it in the definition of audit. What is audit? What do you mean by audit? Audit is independent examination of the financial information of the financial statements in simple words. So as per SA 200, financial information is, putting it in a straight line, it is a structured representation of historical financial information. What do you mean by structured representation? It is nothing but preparing your balance sheet as per the Companies Act, or preparing in the proper format as required by the law or as required by the client. Who are the users of the financial statement? The users of the financial statement start from the management, because they are the decision makers. They need the financial information because based on financial statements, they try to identify what has to be done next. The next are the owners or the proprietors or the shareholders of an organization. Next, your lenders, that is your banks, other credit institutions. The fourth one is your suppliers. Fifth is your customers, and sixth is your government. Government for tax purposes. We make the tax calculations. They use the balance sheet or the profit and loss account prepared, based on which they try to assess the income and tax accordingly. The research scholars, what is applicable financial reporting framework? They've asked us to express an opinion whether the financial statements are prepared in accordance with the applicable financial reporting framework. So what is applicable financial reporting framework? It is a framework as per the law or the standards that have been set based on which your financial statements are prepared. Like Ind AS, accounting standards, Schedule 3, all these things are called as financial reporting framework. Continuing to next concept, what is general purpose financial statements? And next one is what is specific purpose financial statements or special purpose financial statements. See, when a financial statement is prepared in accordance with general purpose framework that is applicable to all organizations, then it is called as a general purpose financial statement. If you prepare a financial statement as per the requirement of specific users, say suppose like if you are preparing any balance sheet specifically asked by SEBI for listing purposes or for the quarterly reporting. In case of banking organization, we don't prepare the financial statements as per the Schedule 3. We prepare according to the RBI regulations. So if you prepare the financial statements in accordance with the requirement of specific user, then it is called as special purpose financial statement, and also it is called as special purpose financial reporting framework also. Continuing with the concept of what is a financial reporting framework. There are two types of financial reporting framework. As we have seen above, there are two types of financial statements. There are two types of financial reporting frameworks also. One is general purpose financial framework, which addresses the requirements of the common users of the financial statements. Like see, the owners can understand, the management can understand, the bankers can understand, the creditors can understand. Then it becomes a general purpose financial framework. This general purpose financial reporting framework incorporates all the fundamental accounting assumptions, including the GAAP requirements. It includes the Ind AS requirements also. There are two further classifications based on the fair presentation of the financial statements. See, when financial statements are prepared, if you prepare the financial statements as per the requirements of the financial reporting framework without making any additional disclosures, then it is called as compliance framework. But when you make additional disclosures by taking us deviations, then such financial statements are called as fair presentation framework. See, we audit the financial information of an entity. So now entity can be in any form. It can be in the form of proprietorship, partnership, company. It can be in any of the legal forms. The next concept is misstatement. As we were discussing the objective of an auditor or auditor, we have to express an opinion whether the financial statements are misstated or not. So what is misstatement? Misstatement is nothing but when the financial statements are prepared not as per the requirements of the financial reporting framework. Suppose we have to account for the inventories either by of cost or NRV, whichever is lower, whether it is AS2 or Ind AS. The requirement is clear. But if you don't understand what is the concept of NRV and we apply whatever we have understood as right, it is not as per the requirement of the Ind AS2 or AS2. So that is what is an error. But deliberately, when you drop the cost of a particular inventory and you account in your books, that becomes a fraud. So if because of these two reasons, if the financial statement is misstated, misstatement can be in the form of fraud or it can be in the form of error. Fraud can also be two types. One is fraudulent financial reporting, other one is misappropriation of assets. Coming to fraudulent financial reporting, you make a provision which is not as per Ind AS 37 or AS 29. Such provision is not complying with the applicable financial reporting framework. So that is a type of fraudulent financial reporting. The second way of fraud is misappropriation of asset. The best example is cash embezzlement. Error. Misstatement can be in the form of error. Error is unintentional. Error can be in the form of clerical error, or also it can be in the form of misapplication of accounting policies. When you don't have the proper understanding of the accounting policies and you make an application of such policy and which results in a wrong figures in the financial statements, that becomes an error.